Representatives from more than 115 firms have gathered in the beautiful Miami area for the Canaccord Genuity Global Resources Conference. And one of those companies is Magnum Hunter Resources, an oil and gas exploration and production company. Its stock is up nearly 90% this year. To find out what's driving the surge in the company's outlook, we are now joined by Gary Evans, Chairman and CEO of Magnum Hunter Resources. Gary, wonderful to have you with us. Thanks for joining. Let me ask you, what is your main message to investors today in the presentation that you will be making? What's the key message you want to pass along here?
Well, Magnum Hunter, this is round two for me, is really only about 4 years old, and we've gone from an embryonic shale play company to one that's really now beginning to develop its resources. And we've been fortunate enough to acquire acreage in some of the hottest unconventional resource plays here in the U.S., and now our production is skyrocketing because of the success we've been having in those plays. And we were either fortuitous enough or had enough foresight about 1.5 years ago to start building a large position in the Utica Shale play, which is in southeastern Ohio, and that's turning out to be possibly one of the hottest, if not the hottest, plays in the U.S. now.
Gary, it's interesting that Utica Shale play, it seems as though that is almost the valuation question for many investors in terms of what those assets are really worth. Can you give us an indication in terms of the potential growth that you do see there?
Well, it's definitely on the early stage. We're trying to delineate the acreage ourselves right now. We've drilled one well over in northern Noble County, right along the Washington County border, southern Noble County, northern Washington, and that's called the Farley well. And that well actually blew out on us, which is very unusual for a shale type reservoir. Then we're drilling our second well currently over on a pad called the Stalder pad, which is over in Monroe County near the Ohio River. Then we'll drill a well. We'll be the first company to drill a Utica test in the state of West Virginia, right across the river, over in Tyler County this year. So with those 3 wells, we have a pretty good idea, because they cover from east to west our entire acreage block. And we'll see most likely very dry, high pressure, high flow rate wells to the east, and we'll see more liquids component, 30 to 40% gas wells to the west. And it's got everybody excited because you're seeing flow rates as high as 30 million a day and 5,000 barrels of oil equivalent per day. So it's something that the industry is looking forward to seeing more completions in.
Gary, can you put that into perspective for us in the sense that what do those economics from the Utica Shale look like versus the Marcellus Shale as it relates to the economics and, of course, what it means to the bottom line?
Well, the best way for me to compare what we're seeing in the Utica is what we were doing down in the Eagle Ford. The Eagle Ford is another very hot shale play down in South Texas, and we had 19,000 acres there, had drilled close to 50 wells, and we were seeing well cost about $8.5 million and getting reserves about 450,000 barrels a well before we sold that division in April this year for $401 million. You take those economics, compare it to what we believe we're going to see in the Utica, well cost about maybe $9 million to $9.5 million, but reserves possibly 2 to 3 times what we saw in the Utica, in the Eagle Ford, in the Utica. And the thing that also adds to your internal rate of return is that the decline rates are so much lower. That's one of our biggest issues we had in the Eagle Ford, is we were constantly dealing with high decline rates. And over in the Utica, we're seeing rates as flat as 2 to 3 years because the wells have such high pressure. You can continue to crank them back and have flat decline rates.
Gary, one of the pushbacks I've heard from some energy investors perhaps is the balance sheet and the debt on the balance sheet. At the same time, you are looking to sell or monetize some of your assets. Can you talk to us a little bit about what you're expecting on that front, what that does to your balance sheet and what it does to your core strategy?
Well, we've been in a divestment mode all year, selling non-core assets, the Eagle Ford being the biggest, $401 million. We sold close to another $100 million of non-core, and we have about $200 on the plate to sell between now and the end of the year. They're already at banks, bids are coming in, contracts are being negotiated. So that's quite a bit of divestiture this year, and as our equity prices continue to increase, we also have outstanding $8.50 warrants that are callable, and so as the stock gets close to $9.50, that's $160 million of new equity that we can call in pretty much a moment's notice. Then as the stock gets closer to 10, we can convert our Series E convertible preferred, which converts at 850. So, you know, you could see easily our balance sheet changing to the tune of close to $300 million just here in the next 60 to 90 days if the equity continues to perform like it has.
Gary, we have to leave it there. Thank you so much for joining us and hearing about your company and your story. Appreciate it.
Thank you for having me today.
Thank you. That was Gary Evans, Chairman and CEO of Magnum Hunter Resources. Well, coming up, the Canadian government wants to narrow the gap between consumer prices in Canada and the United States. We'll